Hello, good morning, and welcome to the IX trading room with me, Richard Perry, market analyst for INFINOX. Well, we've got half an hour today, and I'm going to be talking through how markets are moving. I'm going to talk through the platform on MT5, and I'm just going to be a little bit of sound going on there. Anyway, sorry. I'm going to be talking through the MT5 platform, few market moves, see what the outlook is for major markets at the moment, demonstrating the platform, and yeah, just basically doing that. I hope you enjoy it. Hopefully you are returning from last week, which was our first one on YouTube Live, and this week we're going to be hopefully doing some more good work. So okay, so first of all, what I was going to talk about was what markets are looking at, I think, in the coming days. Now, what we have is just a quick look at the economic calendar. This is the economic calendar from FX Street. And we have, this was Wednesday, so we're not looking at Wednesday anymore. We're looking at Thursday. And Thursday, Wednesday, the important features of Wednesday's trading, which is today, is the Eurozone inflation. Now, Eurozone inflation showing signs of peaking, certainly on the German and the Spanish data that we had yesterday, starting to peak or certainly plateau. Now, the question is, does that continue? Well, also, does it continue on the Eurozone wide data, the Euro area data? Now, the expectation is yes, is for the headline to drop to 10.4%. Core is expected to stay at 5%. So it'll be interesting to see how markets respond to this, because the governing council has been a little bit less hawkish. Few members have been starting to sort of be a bit more worried about growth aspects. So that's something that we need to consider. But certainly, I think at 10 o'clock today, the Eurozone inflation will be a key factor for markets. Then we're looking at the ADP employment numbers at 1:15. Now, ADP, what I'll do is ADP, both ADP and the non-farm payrolls are expected to fall to 200,000. Now, here we see the jobs numbers in recent months. They're just starting to track lower, aren't they, on the payrolls and the ADP? 200,000 would be, certainly on the payrolls, would be the lowest since 2020, really. And there are now growing signs that the jobs market is sort of getting a little bit less tight in the States. You can see this through the jobless claims. Weekly jobless claims are now creeping ever higher, 240,000. But look at here on the continued claims, they are now starting to increase. So it does look as though that the jobs market in the States is less positive, and that sort of leads some on the FOMC to be again a little bit less hawkish, a little bit concerned over economic activity indicators, which are starting to tail off for the States, and that is sort of leading to how the US is. The FOMC is starting to sort of be less hawkish. And how does that, well, as I said, payrolls on Friday is the next important data as well. So payrolls and Eurozone inflation this week are the key numbers. Now, how does that affect markets? Well, we're starting to see US yields starting to roll over, and that is affecting the dollar. The dollar and US yields still have a very strong positive correlation. So yields falling, dollar falling. That is a key factor behind the dollar's decline that we've got in recent weeks, is the fact that yields are no longer rising, and that's something that we need to watch out for. Also, if you're looking at Treasury yields as well, watch out for this one. This is the 2-year Treasury yield, which started to form this little head and shoulders top pattern. Not completed yet, but it's certainly something to watch out for, I think, in the coming weeks if it moves below 426. Right, so where are markets today? Little bit dollar negative. I mean, the dollar has been a little bit more positive in the last few days. Last couple of days, the little rebound that we've seen in the dollar index has come from this big line of support, big support area, sort of 104.50, 105 area on dollar index has been holding. And it's sort of looking at this, I think it might start to see a little bit of a move higher, a little bit of an uptick potentially there on the dollar index. A little bit of a rebound on the dollar, but I do think that this would be a near-term move. I think near-term dollar strength could be seen, but I think it would be just a near-term move that ultimately sort of plays out as the continued correction, I think, as bond yields continue to fall over. So let's see how that's working out on the platform. This is the MT5 platform, very similar to MT4. If you run MT4, don't worry, MT4 and MT5 are very similar platforms. It's just a slight couple of extra instruments that you get through MT5 that you don't get on MT4. Also a few indicators as well, but nothing really decisively different. Here we have the chart that I've maximized. The reason I maximize it is because I've got all these other charts lined up behind, and so many charts, about 20, 25 charts I think I've got. If I had them all tiled, which is what you do when you click this button here, which I'm definitely not going to do, then they all come up tiny and small, and then you have to resize them. Very annoying. So I don't do that. I have them all around about this size, so they are, I can then just easily have them there. Right, euro dollar. Euro dollar is interesting. As I said, there could be a little bit of a dollar rebound. And if the dollar does start to rebound, I think that's obviously meaning that euro dollar would likely be pulled lower. 102.20 was this reaction low that we saw last week. Market pulled back to 102.20 and then moved back higher again. Now, the question, one of the reasons why I'm saying that there could be a dollar rebound that pulls euro dollar lower is this candlestick here, the shooting star candlestick that we had on Monday. False upside break, closed lower on the day, closed lower below the last two candles. Admittedly, those were two public holiday candles. So, yeah, okay. So that might reduce the validity, that's the right word, validity of that candle that we had on Monday. However, still a shooting star, so that it still does have slight corrective bias there through the market. So it could, yesterday again, a little bit of an uptick, got sold into the close. So two candles in a row really where you had moves higher intraday, and then US session, it sold into the close. Had another move higher this morning, interestingly again in the European session. Is that going to be another opportunity to sell? Potentially. Near term possible correction, but I don't think it would go that far. I think this breakout support area that we had, 101 to 102 figure, was a key moment, I think, in euro dollar. Basically because what you saw was this big downtrend on euro dollar, broken. Big downtrend broken. Market then moved through the resistance. Let's get rid of that. Market moved through the resistance of 101 to 102 big figure, and then is now holding the break. But it's also moved above the next resistance line of 103.70. Again, that was an important moment. So resistances are now being broken to the upside. That suggests a more positive trend. You've obviously got this uptrend that's quite a shallow one, and it's moved away from that. So maybe it sort of does have a pullback potential. But the fact that the market is now building new higher lows, breaking through resistances, and again, 102.20, old resistance becomes new support. That is very important for a recovery. So the recovery potential is still growing here on this euro dollar move. So having had that breakout above 102 big figure and holding that support, that again is important. But this big primary downtrend that we've got here also needs to be broken. And again, into the 105s, if you see a move sort of pulling euro dollar higher into the 105s, I think that is a positive, certainly a positive break for the next leg higher. But just for near term, we might see another pullback towards this sort of 102 area. Again, look at sterling dollar. It's a slightly sort of expanding uptrend channel, you can say here. Slight expansion of this uptrend channel, but a good one. And I mean, you look at the fundamentals on UK. It's not great at all. Really isn't great fundamentals on UK. You've got the Bank of England hiking into a recession. You've got twin deficit of 5%, current account and budget deficit, 5%. That's big. That is not a good situation to be in. Yeah, and yet sterling is still recovering against the dollar. And it's more, it is as much a dollar correction as a sterling recovery, I have to add. But there is a sterling recovery that we've got. Question is, how far does it go? Well, I mean, it's pretty big, this resistance overhead, which I get the crosshair, that comes in 122.90. 121.70, 122.90, big resistance there, big resistance. So can the market get through that? Well, positive momentum. I think as long as sterling continues to use the breakouts as support, I think we can still remain fairly confident about it. Get the crosshair there, you can see coming back here, this old support became resistance, and is now sort of a basis of support again. So old resistance becoming new support. Again, the basis of a recovery, the basis of a new bull trend. Old resistance becomes new support. So sterling dollar pulling back into these sort of old mini breakout levels and holding, again, it's encouraging. RSI above 50, encouraging. So it's still looking technically as though this is in a recovery, and it's a good recovery. Anything back towards 50, I think, is still buying opportunity levels. And I think if you got that back towards sort of 17s, maybe 18s, then again, I think you'd still have the RSI above 50. Again, if that found support, it's sort of looking more positive. So I think this is still technically, I mean, the technicals are leading the fundamentals at the moment, because the fundamentals on UK are pretty terrible, but technicals are leading the way. It's just whether it can get through this resistance, 2160, 2170 up towards 2290. That is the big test. Now, dollar yen. This is the interesting one for me. Dollar yen. Dollar yen has been sharply corrected and continues to be corrected. And you sort of look at dollar yen and you think, well, does dollar yen continue to be in this recovery phase? Well, I think it does. I really do think it does. I mean, you look at dollar yen. Let me just show you this chart. Okay, just ignore for now. I haven't moved them on. The labels, just ignore the labels on this chart. The red line here is dollar yen. This pink line here, and it's the best. That and the Kiwi are the two best performing major currencies over the past month. Worst performing currency is the Canadian dollar, again, because Canadian dollar is very tightly knit towards where US dollar is in terms of how the two central banks sort of are viewing monetary policy, and also obviously geographically and many other things as well. So Canadian dollar underperforming, but Japanese yen is outperforming along with the Kiwi. Japanese yen is outperforming because of the falling bond yields. Falling bond yields around the world tightens the yield differentials towards the JGB yields, and subsequently dollar yen falls over. And that is still a big case. And you can see this breakdown below 139.40, the break of the uptrend, the breakdown below 139.40, the new downtrend, lower highs, lower lows. Again, this rally failed around the old resistance. Sorry, the old support. Old support becomes a new resistance. This is looking corrected, moving averages, turning over. All these aspects are suggesting that dollar yen is going to be moving lower, or is certainly under corrective pressure. Now, the question is, what's the next breakdown? Well, the support of recent sessions comes in around 37.50, 37.60 area. That gets broken, go back out one more level, you could see the market potentially coming back towards the 31s, 32s. Next support around the 35, 36 area. But yeah, it really is, I think, turning corrective, and US bond yields continuing to fall lower really does pull dollar yen lower, and that's where we're at here. Right, let's have a look at the gold price. Now, I did gold last week. On 4 hours. Let's get it on daily. Did gold last week, and I'll put the trade levels back on here. You can see trade levels here. I did a pending order on gold during the webinar last week, and I said, well, if it moves above this resistance here, which was thing 1750, that's right, and I think I put it at 1753, 1752. Here we go, down the bottom, 1752. If it moves above that, you start to get a more encouraging outlook, and it is still that way. It filled the trade and moved higher. I've been sort of fluctuating in and out of profit on this trade throughout the last week. So you've still got that in there. And I'm slightly in profit. See the trade levels here. The target, the take profit is sort of, I think 1800. Yeah, sorry, 1800. With the stop loss below the reaction low, I'm still happy with that trade. I still think that's a good trade. So still holding on to that position. No real need to change the stops or adjust the stop loss yet. It's still in this fluctuation phase. I'm still happy with the trade, so I'm going to keep that open. Now, in terms of the analysis on gold, still positive above the breakout. Still positive above the breakout. 1730 was the breakout. This big double bottom. The implied target of that double bottom, if I go one more level, is 1844. So this double bottom is first real, and that's a serious recovery pattern, base pattern there. First real base pattern or reversal pattern we've had on gold since the big sell-off that we had earlier in the year. You had the spike to all the way up to sort of close to the all-time high. It was corrective since then, but this base pattern here, this double bottom, it's a serious base pattern reversal. And also 1730 neckline support holding. That is encouraging. I like that. I like the fact that it is recovering and holding onto the base pattern neckline. Remember, old resistance becomes new support. When you see that happening, that is encouraging. You've got the momentum, positive momentum. That's good as well. So starting to sort of really build a base of support here around the neckline. To me, that suggests a retest of 1786. 1786, I think that is the retest where we're looking out towards. And I like the momentum as well. Still positive on momentum. So you've got a lot of good things going for this recovery. It certainly looks like it's coming towards the test of the 1800s. I think it's obviously above 1786. You look at 1800s, and then the next. I mean, 1810. I think that. Sorry, 1808 was that resistance, but this band around 1810 area comes in. I think that could well be seen on gold. Similarly, on silver, this again a breakout and coming back towards the neckline support of the breakout, holding that line with positive momentum. Still got this run of higher lows, and it's holding. A dollar correction continues. I think this line of this one, yeah. Look at this, a dollar correction. This is the dollar index versus gold. It's very, very, very strongly negative on correlation. You can see this when dollar goes up, gold comes down. Gold and the dollar remain negatively correlated, and you can see that through this here. The average is minus 0.37, which is a strong negative correlation on an average basis over a 12-month period. Currently is at minus 9.5, sorry, minus 0.95. So still, again, very strongly negatively correlated. So as the dollar falls away, the gold price rallies. And as I said, like there might be a little bit of a near-term dollar rebound, but I think it would only be near-term. I still think this dollar is moving lower, and I think that would be what drives or what helps to drive gold higher. So these two aspects, dollar price moving lower, gold price moving higher, negative correlation there. Similarly, it does also hold true with silver as well. Just find the silver one. Silver. Yeah. Similar correlation, minus 0.37. I haven't actually calculated that recently, but it is still very similarly negatively correlated at the moment. So silver again would move higher with a weaker dollar. So that's where we see that moving. So silver holding the breakout support is important. It has fluctuated, and the breakout support is sort of 2080 area up towards 2125. So any moves into that still seem to find buying opportunities, although it hasn't decisively moved on from that yet. I still see that there's recovery potential towards 2250 on this chart. Now, oil is an interesting one. It broke down, or it had a false downside break. I don't necessarily think it is a false downside break. I think that's an initial look at a breakdown the other day below the support at 83.50 area, and then rebounded. I think it's, you look at all these trends, and these are near-term trends within what is probably still, I mean, until it gets confirmed, the breakdown is still a range play. Because look at what happened on this move here. You thought, well, is this an upside break from the resistance that came around 99.50? Was this an upside break? Well, it wasn't. It was a false move, and then you had a sharp retracement. So I still think you've got to treat this as a range for now, until you get a confirmation, a real solid confirmation of a downside break. But the trends are looking that way at the moment. You've got this downtrend, got falling moving averages, death cross also on the moving averages as well. But equally, I could argue that that's what we were thinking back in this phase here, uptrend, a breakout, looking strong on momentum. So you do get these near-term signals that look as though you're about to get a decisive sort of move in one direction, but then they tend sort of end up being false moves. So we need to be careful with this, I think, on oil. My sort of gut feeling on oil is I think it's still going to be ranging. I still think there are different supply and demand aspects of oil that I think are going to keep it fairly ranging. The OPEC plus moves that I think could, I mean, they continue to sort of move towards perhaps even production cuts on oil, and that could again help to keep the oil price supported. So I think that is one of the reasons why technically you get this sort of move to the downside, and then you start to see that oil, and the OPEC countries start to see oil falling, and they start to then sort of discuss potential production cuts, and then that leads to a recovery in oil again. So that sort of leads me to think that oil maybe is going to continue to sort of do these near-term trends within a range. So I'm not yet decisively looking for a downside break on oil. I think it's more of a range play. So let's we've got about 5 minutes, so let's finish off with where we're at on the equity markets. Look at this, S&P 500 has been trending higher in the recovery, but we're still in the primary downtrend phase. You look at S&P 500. Let me just show you. Nasdaq is way down. It's struggling. It really is struggling with this recovery. Tech stocks are not really doing that well, even though US bond yields are falling away. Tech stocks are still not managing to get any traction in a recovery. And you compare that chart to the Dow, which is old economy, which is not tech stocks. Look at the recovery that we've had in the Dow futures. Yeah, it's fallen over in the last couple of sessions, but the recovery in the Dow is so much better developed than it is with Nasdaq. And you base it, and the reason that S&P 500 is sort of S&P 500 is sort of sitting where it is underneath this downtrend is because of the tech sector. Tech stocks are weighing on the S&P, but S&P futures are still holding on at the moment to the breakout, the near-term breakout. This is, I mean, I've got the crosshair 39.25, but essentially there's a support band that I'm calling it, sort of 38.85 up towards 39.35. That is holding decent in the recovery, decent momentum is decent without being decisively positive, but it is encouraging. So you've still got this recovery potential in S&P futures. It's just not sort of flying higher at the moment. 40.50 is the resistance. A couple of attempts at that and then move slightly lower. So it's slight near-term range, you would argue, but it is holding the uptrend and is holding the breakout support. So you've got the positive bias, minor positive bias, slight positive bias on S&P futures, and again ticking a little bit higher today. So buying into weakness on a near-term basis, so moving back towards that uptrend support. Looking at the European markets very quickly, look at the DAX. That's the primary downtrend. Well, admittedly, it went a long way lower than other markets did, but that primary downtrend has been smashed, really strongly beaten, just strongly broken, I should say. Recovery is in place. Got the good breakout support. I'll put the crosshair around the sort of 13. Well, let's say basically 14,000, but 13,970 is where it starts to come in. Breakout support. So any sort of unwind back towards that area, I think is a decent. Is probably any near-term unwind towards that is sort of buying opportunity area if it sort of starts to build support and move higher again. So looking good there. And finally, FTSE 100. I mean, oil stocks are certainly helping FTSE, financials to an extent as well. Look at the recovery. I mean, this is, I mean, bearing in mind where Nasdaq is, FTSE 100 is doing brilliantly well, and that is again because of the weighting of the oil, the weighting of the financials. All but no weighting in tech stocks in FTSE. Very little tech weighting in FTSE. And you can see the recovery, and it's building. And it's strong on momentum. RSI over 70, so moving towards a test of sort of and breakout of the next resistance, which is the August high. And then you start to look at the really big highs, and you can sort of go all the way back to 2019. So it is looking strong on FTSE 100 actually. In terms of a pullback, got the good support actually. Old resistance here becomes new support, 74.40, bang on. Looking good. Right, okay, so thank you very much for coming today, everyone. As I said, we've been live on YouTube, and it's been good. So thank you very much for coming, and join me again next week for some more live analysis and looking at the platform and trading. And yeah, so don't forget to click on the bell to receive notifications and on YouTube. And I'll speak to you soon. Thank you very much.